Nathan, and good afternoon or morning, depending on your time zone. If I could just start very briefly, there has been a lot of discussion recently within the market by which the use of and definition of and product type, etc., for evaluations has been a major topic and of consternation here. Evaluations are not something new. The concept of it began 27 years ago. So this is not a new topic. It has grown in its, I guess, scrutiny throughout the years. When evaluations originally were provided for as a mechanism for not having an appraisal by FIREA, a lot of people didn't really pay attention to what they were and what it really meant. And so therefore, as time has progressed, the regulatory pressures has progressed, and people have become more and more comfortable with the concept of utilizing evaluations. There are a lot of people out there that are promoting things and products to serve as evaluations, which, quite frankly, aren't evaluations. Most recently, and I'm going to refer to a webinar that was put on by the Appraisal Foundation just recently. And in that presentation, it was using restricted appraisal reports for evaluations. And quite frankly, I kind of had a little heartburn with it, because the product that they were providing is a great restricted appraisal report from a USPAP compliance perspective, but it doesn't go as far as is necessary in order to meet the definitions that the regulatory bodies and agencies put together when they mandated or provided for a mechanism to provide evaluations. So, getting off my soapbox, I apologize for that, but it is one of my hot buttons and a pet peeve of mine. But just very quickly, we'll get into the use of evaluation and when it's acceptable per the regulatory agencies. The first is, of course, any transaction where the transaction value is less than or equal to $250,000, whether that's owner-occupied, income-producing, etc. The second is where transactions that are real estate secured with a transaction value of $1 million or less, when essentially the financial institution is underwriting something other than the real estate. So we're really talking about business and owner-occupied real estate properties where the source of repayment is through the business operations, and the bank is underwriting those business operations as the primary source of repayment. The third, and a little more not as clear, but is in subsequent transactions as defined by the agencies. And those subsequent transactions are essentially renewals of existing credits where no new monies are being lent by the financial institution. When we talked about evaluations, we were talking about transaction value, and that's kind of one of the keys, is that loan amount is a transaction value. And I would just caution everyone to understand that transaction value typically does refer to loan amount, but you have to be very careful and mindful of any aggregate exposure that you might have to include in that, in your decision of credit. Having multiple loans to single borrowers on, for example, having maybe 6 residential lots and each having a single note attached to them, and each decision was rendered independently. But the reality is that you may need to aggregate that from an exposure perspective, and that might trigger in and identify your need for something other than an evaluation. But that's something that I'd be happy to talk with anybody if they have any questions, or you talk to your internal audit, external audit, or your agency rep to maybe question that. But it's something that I caution you again for the appropriateness of that transaction. So exactly what do we mean when we talk about an evaluation? And I refer back to the interagencies, and they give us just a very, very clear definition here. Tongue in cheek, it's an evaluation for those exemptions. You know, the problem there is it doesn't tell us anything, but it is key that they use the term valuation, and they truly mean it is not an appraisal. So you can do something other than an appraisal, but it is a valuation tool. So an appraisal can serve as an evaluation, but an evaluation doesn't necessarily have to be an appraisal. So then the question comes down to why even use evaluations? And I would tell you, if you look essentially at the definition of de minimis, which the interagencies use in FIREA for addressing evaluations, they use the term de minimis. And Webster defines it as basically unimportant, an unimportant concept. So what we're really talking about here is the real estate becomes not necessarily the key to the loan decision. Again, you're typically looking at other sources of revenue for repayment. But it's also important to look at and understand that the agencies are very clear in the concept of making sure that the use of evaluations fits into the risk profile, the credit underwriting culture, your overall portfolio, and risk truly is the key to their philosophy in regarding how transactions and due diligence is required for completing that transaction. So we know when we can use evaluations. Now the question becomes, when shouldn't you use an evaluation? And in December 2010, the agencies gave us what to be mindful of and what to be careful of. And you know, it's the normal. Again, talking about risk parameters and defining out kind of maybe when the risk of the transaction might be too great, whether it's high LTVs, unique properties, you're outside of your lending footprint, etc. Or you got the big one is you got a borrower with a very high exposure or high risk industry that you're concerned about. But I would give you again some advice here that says that there are ways to mitigate these ideas of maybe you shouldn't use an evaluation. There's always ways to mitigate the risk. And For example, if you had a golf course in your local market area, that might be considered a unique property, but quite honestly, you probably should not be using just your normal appraiser or normal local market source to get an evaluation for you. If you used an industry expert in the golf industry to provide you that evaluation, you would be minimizing that risk. And that's something that we do here at Cushman and Wakefield. What we end up doing is every specialized property type is completed by an industry expert. Cushman and Wakefield has groups within our organization that specialize and just do specific property types. And I use the golf course as an example. We have a golf group, we have a senior housing group, we have self-storage groups, etc. And so if you had a golf course and we were to complete the work, you're going to be having an expert in the golf industry provide that evaluation to you. And that gives the regulatory agencies much more comfort that you went to an expert in the industry versus maybe a local market source. All right, we now know what an evaluation is, what we shouldn't use it for, why even participate in using evaluations, and of course it's always cost and timing. Those are the two big keys to every transaction. You know, given my history, I know what it's like, the pressures that are put onto you guys to get deals done quickly and expeditiously, etc. But it makes for a very pleasant customer experience. Your borrower will have a much easier time of this if you can use an evaluation and use an evaluation properly, because you reduce the closing costs associated with that transaction and you get it done quickly without a lot of input and consternation from the borrower. Also, one of the great benefits you have is the relationship that you have with Mountain Seed. Mountain Seed provides a mechanism for you guys to administer the process in a very expeditious manner. And by using Mountain Seed in the evaluation program, that continues to reduce your overall administrative burden and thus your internal costs. Evaluations are a variably demanded product. You don't want to have fixed costs having to procure evaluations. Why not make a variable cost associated with a variable demanded product? But most importantly, in my mind, it shows the federal regulatory agencies that are in charge of you, of your examinations, that you are addressing safety and soundness, and you are differentiating between risk parameters associated with your portfolio and your loans. That is by far, to me, the most advantageous concept of showing your regulators that you do understand the concepts and are using products that are appropriate in appropriate situations. Evaluations are just a fundamental concept and component of a valuation function, which, you know, the interagencies tell us everyone should have a valuation program and compliance program. And by utilizing an evaluation as one of those components, you're showing them that you have that understanding and a procedure in place to utilize them correctly and to understand that you understand the program mentality that they were trying to portray and put across to us to follow and understand. And this is kind of one of the sales pitches I get into for Cushman Wakefield. We do know that there are other products out there. There are other people in our competitors that are doing what they call evaluations and providing them. I won't name names, but I feel very strongly that a lot of what is being held out as an evaluation is not appropriate. It is appropriate. I take that back. I'm going to say it may be appropriate in certain circumstances. I think there are such low-risk transactions out there and such minimally burdensome transactions where some of those products may be appropriate. It all depends upon your portfolio, your exposure, etc. But what Cushman Wakefield provides is really differentiated from every other product. We do a restricted appraisal report that we consider to be on steroids. It's not a product that gives you an address and a value. We provide a product that tells you why we chose what we chose, how we thought about through the process, what are the integral parts of why our decision and logic was used. We provide both interior and exterior photographs of the property, so it's not a drive-by concept. And it's completed by a state licensed, state certified appraiser who is a full-time employee of Cushman Wakefield in the area in which the property is. We differentiate ourselves by not being a checkbox form. We are truly a narrative type form, but we're consistent in our documentation such that you can look to each report and find what you're looking for very quickly, but it's just not a form-based product. We use and very much so depend upon our brokerage and leasing areas and networks for Cushman & Wakefield to assist us in getting an understanding of the market areas and the dynamics that are happening. So we feed upon ourselves in terms of data, etc., being very mindful of the need to have Chinese walls and confidentiality, but it certainly helps us in helping to understand some of the market dynamics that are taking place. And lastly, working with Cushman & Wakefield, and given my experience and my knowledge base, I'm very, very comfortable in understanding, staying on top of. I've experienced the positions that you guys are in right now in terms of the need, etc. But we have USPAP compliant reports. I created this product over 5 years ago when I left banking. And the purpose of doing so was that there were no products out there that I felt comfortable at my institutions using. And therefore, we created our own internal processes and our own internal group to create and produce evaluations. Now, near the end of my tenure at Huntington, I felt that it was probably time to outsource that and have that done by external personnel. I started getting uncomfortable with the concept of having an internal process that was 100% independent. And so I was pushing to move that out and have it outsourced, getting it, but I couldn't find a good product. So I left left Huntington and created this product to provide institutions like yourselves with a great source, a credible source, and a reliable source of evaluations. Again, evaluations started 27 years ago, came into existence. They're not new, but a lot of appraisers don't understand what they are. My experience and knowledge base of evaluations and what the agencies really understood and put together as a need and a source, and their philosophy around evaluations has given me kind of a unique opportunity here to provide, I think, consulting and services to other institutions. I talk to the agencies 2 or 3 times a month, just with my contacts, just trying to keep up with what's going on in the marketplace and what's happening in their philosophies. And I led off with the concept of what's happening from the Appraisal Foundation and why even the need to start addressing this from the foundation's perspective. And it's because appraisers don't understand what evaluations are. And I think, and I'm going to be a little rude here, but I think it's evident from what the foundation has put together that they're not really understanding what an evaluation is either, and what the agencies meant when they put together the concept of an evaluation. So I want to be of assistance to you, whether it's providing you evaluation services or helping you understand those. Please let me help you. Let me answer your questions. I'm open to whatever we can to assist you. With that, I'm going to kind of open it up and leave some time here to talk about what might be, what your questions might be, or if I can help in any way.
Thanks so much, Paul. So we've got a couple questions here that people have already submitted, and Paul, what I'll do is I'm gonna tee up some of these for you. I think everybody probably recognizes on their webinar panel that you can submit a question, and we see those at least a couple of those popping up. So Paul, let me lead off with this one. What evaluations are available on income producing properties under the $1 million threshold and using an income method approach? Is that kind of in your wheelhouse? So talk a little bit about that.
Absolutely. For the most part, there are going to be two different concepts here in terms of what's available in terms of an evaluation product. Everyone's familiar with the direct sales comparison approach, where you're just using sales. Then there's the direct capitalization approach, etc. Both of those are great. They have a use. Our product will use the best methodology, 1 or 2 methodologies, to get to the answer. It's not just limited to a sales approach. We may do both approaches to value in order to get there. But we absolutely do use evaluations and complete evaluations for people on income producing properties. And I would tell you that it's not necessarily understanding that we're talking about the $1 million and less type loans where there may be an owner occupant and a couple of tenants, etc. But it's in situations, it could be a very large apartment complex where you're just renewing the loan and doing a subsequent transaction. and you need to validate that the value that you have on the books is still relevant. So we can do an evaluation on that for you to help you know that you're still value good, so to speak, to complete your extension of credit.
Yeah, and Paul, we've got a couple questions around subsequent transactions and the idea of the market not having changed. I mean, I think you just said that, but since we got a couple of specific questions about that, can you speak to how your product addresses that issue?
Yes, we have. Again, I think our product is such that we can, if we know you're dealing with a subsequent transaction, we will provide you with detailed information regarding current conditions of the marketplace. If you are dealing with a subsequent transaction and you want to provide us the prior appraisal, we can complete the evaluation in what I'm going to call a validation type approach. And that is, here's what the prior appraisal said, here's where you are now in terms of market, property, and value. So we're going to compare and contrast and say, it used to be, for example, it used to be that we had a 12% vacancy rate, now the market's at 8%. They said market rents were, you know, $8 a square foot. Market rents are now $9.50 for this type of product. Expense levels, etc. Compare and contrast expense levels, and then we can do one of two things. We can either come up with our own value, or we could provide you with a not less than value, where we're addressing and saying you're at least as good as what you were, which is one of the tools that the agencies provide us with, providing a not less than value. It's USPAP compliant for us to do that, and it provides you the documentation you need to move forward with your transaction. So we will address that. If we're doing just a normal evaluation for you, we don't know that it's a subsequent transaction, we may or may not be able to address where it has been in the past and compare and contrast the market at that point versus the market today, the properties, relevant characteristics then versus today, and value. So hopefully that cleared that up.
Yeah, that's great. So, I'm going to give a couple of administrative notes here. There's a lot of questions in here asking for specific things from us or samples, or can you send this to this email address and that kind of thing. Feel free to put those in. Obviously, we won't, for everybody's benefit, talk about those, but do feel free to enter any specific questions like that, and we will definitely follow up with you on all of those kind of things. Paul, let me try to grab out some of these that are a little bit more general. So one question about providing copies of the evaluation to the borrower, and Paul, I'll tee you up by saying I do want to be careful that we're distinguishing between residential evaluations and commercial evaluations. So Paul, on this call, his focus has been commercial evaluations. We won't get into it because it's outside the topic, but everybody should be aware that there is an ECOA rule out there that for 1 to 4 unit family dwellings, that you need to provide a copy of the valuation to the borrower in certain situations. That would include an eval. So the regulators use the term valuation generically. There's a consumer regulatory issue there with ECOA. But Paul, outside of the consumer regulatory issue, what have you found to be best practices in terms of providing a copy to the borrower on the commercial side?
Well, thanks, Nathan. There are instances where you are, again, required to provide the borrower with a copy of the evaluations. If you're into a Reg B transaction, it absolutely is required that you provide that evaluation to the borrower. We provide the bank an evaluation in a restricted appraisal format, and we're going to allow you to do what is appropriate in your market. restricted appraisal reports work protected because you are our client, and you have the choice then of either releasing that document to the borrower or not. If we had our choice is we would probably prefer that you didn't, but we understand the dynamics of markets, etc., and people requesting it. And so we cannot stop you from doing it. But be aware that Reg B does require that in those transactions that are subject to Reg B, that you are required to release that evaluation.
Great. Thanks, Paul. Again, we got a lot of specific comments about how to order this product through our system, things like that. We will be following up with all those people just so everybody knows, and I know we probably already covered this, but we have both Mountain Sue clients and non-clients on the phone. For Mountain Sue clients, Paul's product is easily available to you through the commercial appraiser evaluation order type. So anybody who is a client, that's already available to you to order, and anyone at Mountain Sue can give you details on the pricing and the processes, and anybody who's put a comment in here, we will definitely be following up with you to make sure that you know how to do that. Let me just scan through here and see if there's any other kind of more broadly applicable questions. And anybody who's asking for samples, we will definitely follow up with you on that. We've got some folks asking questions about appraisal reviews. We'll follow up with you on appraisal reviews for sure. I just want to stay right on point with what we were talking about today. Paul, any comments? The only other one I see in here relates to appraisers performing evaluations. Clearly, appraisers are involved in your product. We've got some questions here about state regulatory agencies and how they relate to this whole process. Can you just speak generally on that?
As I indicated, every one of our employees that we use to complete evaluations are full-time employees of Cushman Wakefield. They're all state licensed, state or state certified within the state if the property exists. They're familiar with the markets. We are very aware of state laws and the uniqueness of each and every one of the 50 that sit out there. And we have completed evaluations in every one, and I'll tell you, the one exception is we have not, for whatever reason, we've never completed an evaluation in South Dakota over 5 years. Be happy to do it. We have that coverage, but for whatever reason, that has not happened. But I have people that sit in each and every Cushman Wakefield office that will provide the evaluation services for you. So we use our existing personnel to complete it. We're all licensed or certified. Many have an MAI designation and will be the principal signatory on those documents as well. So we do follow the state regulations, but more importantly, I think we exceed those and exceed the expectations of the federal regulatory agencies there.
That's great, Paul. Thank you. And we're continuing to get questions, which is really good. We're continuing to get questions about specifics. Can you please send to this email address and all those kinds of things. Just know that we do have an attendee list of everybody who attended today, and some of the questions are just saying, can you please include everybody? We will definitely include everyone in communications about how to order these, pricing and process. We'll make sure that everybody who attended today's webinar gets that information and gets that quickly. All right, well, Paul, go ahead.
Nathan, if I could just very briefly, this page, and I should have turned to it earlier, gives my contact information, etc. My contact information is there. I'm happy to answer any questions offline that you may have. Also, feel free. Brad Belcher, who's on the line, and I apologize he was having some audio issues. But Brad is senior director. He's one of my senior people on the evaluation team for me. And Brad can answer questions for you as well. So feel free to open up to either one of us directly if you want to.
Great. Thanks, Paul. All right. Well, that'll do it for us. Just know that we'll be following up with everybody. Paul, thank you for your time. We do believe that this is a great solution. Paul's put a lot of time and effort into this, has a lot of experience in this area, and is really the right guy. So we're happy to be working with Paul, and thank you for everybody's time today.
Thank you, everyone.
Bye-bye.